Welcome to S&P Knowledge Series. In this episode, let's discuss on the topic, International Trade Settlement in Indian Rupee INR. Authored by S.N. Panigrahi, Certified PMP, Authorized Training Partner ATP, Instructor PMI, USA, Fellow Institution of Engineers, FIE, Chartered Engineer, GST and International Business and Projects Consultant, Corporate Trainer, Mentor and Author, National Council Member, IIMM. International Trade Settlement in Indian Rupee INR. Given the current geopolitical and economic situation prevalent across the globe, U.S. sanctions on use of U.S. dollar for transactions with Iran and Russia, and considering the continuous weakening of the Indian rupee INR, and to promote growth of global trade with emphasis on exports from India and to support the increasing interest of global trading community in INR, the Reserve Bank of India (RBI) vide AP, DIR Series Circular Number 10, dated the 11th of July 2022, has allowed international settlement of trade in INR for export and/or import of goods and services as an additional arrangement for invoicing, payment, and settlement of exports/imports in INR. International Trade Settlement in Indian Rupees INR. A right step to internationalization of the Indian rupee. The settlement in Indian rupees INR is a right step aiming to internationalization of the Indian rupee, and to promote growth of global trade, with emphasis on exports from India and to support the increasing interest of global trading community in INR. Especially keeping in view of the restrictions for trade settlements in US dollar for transactions with Iran and Russia, and to address strange situations like scarcity of forex reserves in case of countries like Sri Lanka, the decision is an important step rightly taken to facilitate trade in INR. This would ease India's hard currency outflow substantially, reduce the dependency on US dollar requirements and strengthen rupee. This mechanism also may reduce cost of conversion charges exporters and importers. This is an additional arrangement for invoicing payment and settlement of exports, imports and would coexist with the current practice of trade settlement in freely convertible foreign exchange forex. International Trade Settlement Current Practices. At present, all export contracts and invoices shall be denominated either in freely convertible currency or Indian rupees, but export proceeds shall be realized in freely convertible currency. The practice of export invoicing in INR is already existing, however, the payment must come through Vostro accounts maintained by foreign banks with a bank in India. Trade with Nepal and Bhutan in INR is covered by special arrangements which is existing for a long time. Also, Asian Clearing Union (ACU) transactions which shall be denominated in ACU dollar are existing for promoting regional cooperation and with the objective to facilitate payments among member countries Bangladesh, Bhutan, India, Iran, Maldives, Myanmar, Nepal, Pakistan and Sri Lanka for eligible transactions on a multilateral basis, thereby economizing on the use of foreign exchange reserves and transfer costs, as well as promoting trade among the participating countries. India had a barter-like mechanism for trade settlement with Iran, wherein Indian oil refiners were paying in rupees to a local Iranian bank and the funds were used by Iran to pay for imports from India. Salient features of RBI Circular. Reserve Bank of India (RBI) issued AP, DIR Series Circular Number 10, dated the 11th of July 2022, under Foreign Exchange Management Act, 1999 FEMA. Some of the salient features of the said circular are: all exports and imports under this arrangement may be denominated and invoiced in rupee INR. Exchange rate between the currencies of the two trading partner countries may be market determined. The settlement of trade transactions under this arrangement shall take place in INR. An authorized bank would require an approval from the RBI to implement this arrangement. Indian banks will be permitted to open a special Vostro account (SV account) of the correspondent bank of the trading country. Indian importers undertaking imports through this mechanism shall make payment in INR, which shall be credited into the special Vostro account of the correspondent bank of the partner country, against the invoices for the supply of goods or services from the overseas seller or supplier. Indian exporters, undertaking exports of goods and services through this mechanism, shall be paid the export proceeds in INR from the balances in the designated special Vostro account of the correspondent bank of the partner country. Payment towards advance for exports from SV account is, however, subject to the availability of funds, executed export orders, export payments in the pipeline. Advance against export may also be received in INR. Set-off of export receivables shall also be permitted subject to existing RBI master directions. Let's now understand pictorially how the international trade settlement takes place in Indian rupees INR. For any international transaction from India, there are two sides. Indian side and overseas, that is outside India. Let's first discuss how the transaction of exports from India happens. There is an Indian exporter and other side an overseas importer. As per guidelines issued by RBI in its circular, dated 11th July 2022, the overseas bank of a partner country with which import or export has to be done shall open a special INR Vostro account with authorized dealer AD bank in India. Indian exporter exports goods or services to overseas importer. After export, the exporter negotiates invoice denominated in INR and other documents with the Indian bank which mittens special INR Vostro account of overseas bank. On the other side, the overseas importer pays an equivalent amount of INR in local currency of that country as per the prevailing exchange rate and informs the bank to pay to the exporter in INR. The overseas bank instructs to the Indian bank to release the payment in INR to the Indian exporter from the balances in the designated special Vostro account maintained by them with the Indian bank. For this transaction, the overseas bank collects forex exchange fees from the overseas importer. The Indian bank releases payment to the Indian exporter in INR from Vostro account of the overseas bank. No currency conversion as entire transaction happened in INR. So, no forex conversion charges shall be collected from the Indian exporter by the Indian bank. Now let's understand how settlement of Indian import transaction happens. Imports are made by the Indian importer from overseas. The overseas exporter exports goods or services. The Indian importer pays in INR and credits the amount to Vostro account of overseas bank maintained with the Indian bank. No currency conversion and no forex conversion charges for the transaction. The overseas bank instructs to the Indian bank to retain the amount in INR in the Vostro account maintained by them. On the other side, the overseas bank pays equivalent amount of the transaction in local currency of the overseas country to the overseas exporter. The export or import undertaken and settled in this manner shall be subject to usual documentation and reporting requirements. Letter of credit (LC) and other trade-related documentation may be decided mutually between banks of the partner trading countries under the overall framework of Uniform Customs and Practice for Documentary Credits (UCPDC) and Incoterms. Exchange of messages in safe, secure, and efficient way may be agreed mutually between the banks of partner countries. Amendments carried out by DGFT in sync with RBI circular. Realizations in Indian rupees export benefits allowed. DGFT notified vide notification number 33 2015-2020, dated the 16th of September 2022 by inserting the para 2.52d to permit invoicing, payment and settlement of exports and imports in INR in sync with RBI's DIR Series circular number 10 dated the 11th of July 2022. Further, DGFT vide notification no 43 2015-2020 DGFT, dated the 9th of November 2022, made amendments under FTP to permit exports benefits, fulfillment of export obligations for invoicing, payment and settlement of exports and imports in INR as per RBI's DIR Series circular number 10 dated the 11th of July 2022. Accordingly, amendments in FTP were made in Para 2.46 Import for Export, 2.53 Export to Iran, realizations in Indian rupees to be eligible for FTP benefits, incentives, 3.20 Status holder, 4.21 Currency for realization of export proceeds. Vide Public Notice number 35-2015-20 DGFT, dated the 9th of November 2022, amendment made in Para 5.11 of the HBP, to permit the invoicing, payment and settlement of exports and imports in INR for export proceeds under EPCG scheme. Export realizations in Indian rupees export benefits. RoDTEP and duty drawback. RoDTEP scheme. As per Para 4 of Notification No. 76/2021 (NT), dated September 23, 2021, duty credit allowed under the RoDTEP scheme is subject to realization of sales proceeds within the period allowed by the RBI. But no specific mention about realization in any particular currency. So realizations in Indian rupees is entitled for RoDTEP benefits. Duty drawback. Similarly, Section 75 of the Customs Act, 1962, and the Customs and Central Excise Duties Drawback Rules, 2017, only say that the sales proceeds must be realized, but not mention particular currency. So, the entitlements of drawback will be available against payments received through SVAs also. Refunds due to zero-rated exports under GST. Rule 96A of GST Rule, export of goods or services under bond or letter of undertaking. Rule 96A, 1A for export of goods states exporter to pay the tax due along with the interest if the goods are not exported out of India within 3 months from the date of issue of the invoice for export. Here in this rule it states only condition of exporting the goods out of India, but not stated any condition of realization of export proceedings. Rule 96A, 1B for service exports states exporter to pay the tax due along with the interest if payment of such services is not received by the exporter in convertible foreign exchange or in Indian rupees, wherever permitted by the Reserve Bank of India. Here in this rule states realization either in convertible foreign exchange or in INR as permitted by RBI. Rule 96B of GST Rule, recovery of refund of unutilized input tax credit or integrated tax paid on export of goods where export proceeds not realized. Rule 96B refers to sale proceeds in respect of such export goods have not been realized, in full or in part, in India within the period allowed under the Foreign Exchange Management Act, 1999, 42 of 1999. This rule also not states anything specific about realization of export proceeds in convertible foreign exchange or in Indian rupees. Therefore, from the above rules it is very clear that export refunds are allowed even if the export proceeds are received in INR. Positive net foreign exchange earnings (NFE). Certain mandatory provisions of achieving positive net foreign exchange earnings (NFE) under SEZ Act 2005 and SEZ Rules 2006 and also corresponding provisions of FTA in respect of EOU need to be suitably amended for allowing export proceeds received through SVA in INR. Conclusion. Trade settlement through INR-denominated Special Vostro Account (SV) account by RBI is a welcome move that would facilitate trade with sanctioned countries like Iran and Russia, wherein it has increasingly become difficult to use United States dollar, US dollar, or euro-denominated correspondence account for trade settlement. Rupee settlement mechanism introduced amid a steadily falling rupee would help India pay for its imports using rupees instead of US dollars from its foreign exchange reserves. This will to some extent lessen draining of forex and reduce the dependency on US dollar requirements and strengthen rupee. This mechanism also may reduce cost of conversion charges for exporters and importers. India has received responses from 4 to 5 countries for its mechanism for international trade settlement in rupees, while other nations have also shown interest, according to Deputy Governor of Reserve Bank of India. As per reliable sources, Russia is the only country that has shown interest in the new arrangement for now, and 9 Russian banks have been permitted to set up Vostro accounts to facilitate rupee-based trade. In 2021-22, India's exports to Russia stood at $3,254.68 million, while imports from Moscow were valued at $9,869.99 million. If rupee settlement mechanism goes well to convert trade with Russia under this route, it can potentially pay for a chunk of its oil and defense imports in INR. This would ease India's hard currency outflow substantially. However, it is expected that trade settlement in INR with countries where India has trade surplus will be successful, but settlement with trade deficit countries would be difficult unless a strong line of credit mechanism is also put in place. Several Asian economies such as Indonesia, the United Arab Emirates (UAE), Sri Lanka, Myanmar, and India are also in discussion with each other to settle trade in their domestic currencies. Though proper amendments are suitably made in respect of export incentives and refunds, certain other mandatory provisions of achieving positive net foreign exchange earnings (NFE) under SEZ Act 2005 and SEZ Rules 2006 and also corresponding provisions of FTA in respect of EOU need to be suitably amended for allowing export proceeds received through SVA in INR. Do you find the presentation informative and useful? If yes, then click like and also subscribe the channel for free to receive updates. Thank you. For more details, contact SN Panigrahi at the below contact details.